Hello everybody, Justin here. I hope you guys are doing well, having a great day or a great night. And before jumping to the charts, don't forget to smash the like button, share with your friends, and subscribe as well. And let's do it. So this is the first time that I'm going to make analysis on Brazilian Bovespa. And yeah, let's take a closer look. Let's start from the macro as always, and then we jump into the micro, okay? First things first, let's take a look on Fibonacci. Hold on. Okay, so what's interesting here? It's the bulls found the bottom on the 50% range, okay, which is not only the 50% here, but it's the average not every, it's the average points, the average because I'm used to talk about this when it comes down to currencies. So for the whole range, the 50% average, but not only for this setup, okay? And I'm going to show you just a second, and let's take a look. Okay, so just a second. Okay, so not blue, sorry. The golden lines are my personal setup, okay, my own tool. So we saw the 50% is around this range, okay, but we measured this guy from this guy right here, but the measure came from the zones and not by the number of points itself, okay. So this is something that I already explained in the Champions Club, but yeah, so let's go. Let's take a closer look here for the top. So we have a problem here because without confluence at 121,393, there is no confluence, and so later on the bulls will need much more time, not much more, but they will need more time and more momentum to make new highs again, okay. So for example, we saw in US indexes and stocks the confluence way above this level, which means the recovery will be faster on their side, okay. So let's take a look here for the candles, just a second. So a bearish hammer, this my call was in between these two candles here, was by the late January, and then we had a small reaction before Feb 19, and then we had the big crash. That's when I nailed Dow Jones and also other markets as well. I have all the documentation shared already. Yeah, so now what we are going to do is to measure this guy right here. There is a problem here because this is not bullish. Some people call this a dead cat bounce or loser's rally, okay. And so let's take a look. Not bullish at all. Okay, so what's the big deal here? Without any attack on the 80-20%, it reduces significantly. And sorry, English is not my native language. It reduces the chances for a stronger bullish attack. Okay, because if we make it, all this weight would be way aggressive. But 780, 60, and 61 are natural limitations for overextended and catch-up moves. So this is the first reason we end up rejected here, and then rejected again, and then we have the um, evening star. And this is bad. Okay, folks. Some people call this a hammer, but yeah, it's a straight evening star below key level, way bearish. Okay, very bearish. So another thing. Let's go for the weekly. Oh, just a second. Sorry. Okay, so here on the weekly, we have odds. We still have odds for another bullish attempt. Okay, because we have the first one was bearish, rejection. The second was bearish as well, shooting star, bearish spinning top. The third one, the evening star, again, bearish, very bearish. And then right now we have what? Another bearish spinning top. And those are basically indecision candles. The market is waiting for more information, too long or too short. Okay, but we are expecting. Let me show you here just a second. So I was right back in 2019. Let's go for the single one. Yeah. So this is a bearish time frame. As we enter September, it's going to be bad, in my humble opinion. Not to mention, August 19 is also another very significant date, and yeah, things can go a bit wild. So we have to watch out for September as well, also late August. And so this is no man's land. Okay, folks. I know there's a lot of people that are sitting on their longs, and this is a very dangerous scenario. Okay, so now let's go for the 3 days. We had this ascending behavior, which is clear on lower time frames. You're going to take a look. A cloud here, dark cloud covered, a bullish hammer, still no follow through from the bulls, another hammer. Turning, it's like people are buying the candle, but there is no follow through. Okay, so we can presume, I believe this is the word, that they are buying the support on all the main assets, okay, in the index. So we have a somewhat a flat level right now for the ones at the top, and people still longing their previous support. That's probably one of the reasons we are seeing this kind of behavior here. Let's go for the daily. Okay, so there is nothing clear here. There is no symmetry. Let's take a look. I'm not going to speculate here. Yeah, so the only thing that's clear for now is this scenario here. Okay, and still it is speculation because you only have two points for connection, and yeah, can still be dangerous. And let me see. Okay, so another thing about this behavior here, this kind of behavior can be tactical retreat, just probably because the market is unsure. The main reason we are seeing all these doubt candles, and yeah, so the same way this kind of behavior, it's more bullish side, but in the other side, if we keep it going without follow through from the side of the bulls, the bears will step in. Okay, and also we know the West market is going for probably the last leg up. And if this is true, and if this happens, Bovespa is going, it will probably go down hard. Let's take a look on the 4 hours. Just a moment. Okay. The nature, the DNA of this pattern here, it's of a soft falling wedge. Why soft? Because it's moving slowly. Usually, falling wedges are more aggressive. Okay? So this is something to watch out. And let's take a different approach now. Just a moment. Hold your head, cool your jets, we are almost there. Okay, so this is what we have for now. Let me see. For bullish continuation in a different perspective. The bulls are looking for another bull break. Believe it or not, they are. Let me see, just a second. Yes, so they are looking for another bull break, but the problem with this bull break is this. Just a moment, I will show you. So we are talking about a second. Okay, so this is probably going to be the outcome of a bull break from this pattern right here if the bulls keep pushing. Okay, something around 180,000, maybe 190,000. Okay, but now let's take a look on the weekly to see how at which level it is. Just a second. Okay, so as you guys can see, even if the bulls manage to make a bull break, we're still below the 80% range, which is still bearish, and the chances to end up rejected from here are very big. And then, just a second, and then if we go up and end up rejected again, it's going to be 100% bearish. Okay, so we need more time. We have to keep watching to see how this is going to develop, but things are going wild as we approach August 19 and also September 1st. Okay, so guys, I believe this is it for now. Thanks for your time, thanks for your patience, thanks for your support as well. I hope this analysis may help you in some way, and perhaps in the way you read the charts or improving your trading setup. And yeah, this is it for now. I hope you guys have a great day or a great night, and I will see you guys soon. See ya.